time today. We can't answer your questions, or we need to take things on notice. Just please, keep in touch with us. Our contact details are on the slides. And just one thing we wanted to sort of clarify is in this sort of presentation, we only really provide general guidance. We can't answer specific questions that are, specific to your particular, situation, because we do find in the excise space that a lot of things are a case-by-case basis, and what might be the case for someone could be slightly different for someone else, and we don't want someone else sort of relying on something we say today to one person that's sort of, and applying it to their situation. So please contact us if necessary. So having said all that, let me get access to my slides. Oops. So just a really quick overview of excise. It is a commodity-based tax on alcohol, but also on tobacco and petroleum. So when we talk about excise, it's not just on alcohol. It does also apply to tobacco and petroleum, and only for goods manufactured in Australia. So if they're imported, they're not referred to as excisable goods. They are excise equivalent goods. So the equivalent amount of duty is required to be paid on them, but they aren't referred to as excisable, they're EEGs. And these are the excisable goods that are listed in the schedule to the Excise Tariff Act. So if the goods appear in there, then they are subject to excise. So at a high level, beer, spirits, as you good people are manufacturers of, so includes things like brandy, whiskey, rum, gin, vodka. Fermented beverages that aren't subject to one equalisation tax. So for those of you that are aware, things like cider, being a fermented product, is subject to WET, provided it meets the definition in the WET Act. But where a product doesn't meet a definition, so for instance, a fermented cider that maybe has some colours or flavours added to it, it would be an other excisable beverage, so it falls to the excise system. Ready to drink products, vodka and soda, gin and tonic, those sorts of things are subject to excise. And just one thing to note, excisable goods that are subject to item 3, or for instance, they're 3.10, doesn't actually have to be a beverage. So there will be situations where there will be things that are subject to excise, but aren't necessarily beverages. And Bennett and I were discussing it today. There is a concessional spirits regime. So high strength spirit may be used for cleaning or something like that, where it meets the requirements to be concessional spirit, it's entered at a free rate of duty. But where something may not meet the requirement to be a concessional spirit, or for instance, a denatured spirit like a methylated spirit, if it's not denatured according to the formula, then it would still be excisable and would fall to 3.10, even though it may not be a beverage. Excise duty is actually imposed under the law at the time the goods are manufactured or produced. So as soon as they come off the still, technically for spirits, technically excise duty is imposed. However, payment isn't required until the goods have been delivered for home consumption, which can sometimes be a tricky term. People sometimes think it's anything that's consumed in someone's home, but it does refer to a particular point in time, which is where goods were released into the domestic market for consumption with the permission of the Commissioner. So for those people who potentially have like an on-site tasting room or something like that, goods that are consumed on site are deemed to have been delivered into home consumption on most occasions. So the confusion around it being consumed in the home is not quite correct. It's when it's released into the domestic market. There are circumstances in which duty is not required to be paid. So goods that are exported, there's no duty to be paid on exported goods. So that's where we were just talking about delivered for home consumption. Home in that respect actually probably more relates to being within Australia rather than being exported. I touched a little bit on concessional spirit. So as manufacturers, you may have people come to you with either a permission from the ATO or telling you that they fall within a class of persons, which enables them to obtain spirit free of excise duty. As a manufacturer, you can provide it, but it needs to be reported on your excise return, but it is entered at a free rate of duty. And also the big one that we got a lot of questions on previously and continues, I think, to be a topic of much conversation is you could be exempt from excise duty where the goods are subject to the excise remission scheme for manufacturers of alcoholic beverages. So if you meet the requirements of that, again, goods are put on your excise return, but the little drop-down box, I believe, on the return is ticked to say, yes, you're applying that remission, and duty isn't required to be paid on those goods. As I'm sure you are all very well aware, excise is a very highly regulated system. There are lots of licenses and permissions that are required or could be required to operate in this space. So for those people who manufacture goods, they would require a manufacturer license. There is also a storage license. A separate storage license isn't required over the premises that someone may already hold a manufacturer license. You basically are licensed to store the goods that you manufacture, but there are sort of separate storage licenses that exist just for storing goods, but not for manufacture. Again, the system is regulated in that if goods are going to move around before duty has been paid on them, we have movement permissions. So you can either have a single movement permission, so just a one-off movement of goods, or you can get a continuing movement permission for sort of free movement of goods between certain premises, and they're things that you apply to us for. So you need those before you start moving goods around. And there are also export movement permissions to enable goods to be moved from the place where they are currently stored to the point of export, or non-export movement permissions. Periodic settlement permissions, these are what allow entities to report and pay the duty liability after the goods are delivered into the domestic market. So as it says at the bottom there, it's discretionary. The ATO assesses license applications and permissions that we provide, and there's a range of factors that we consider. But the overall and the overarching sort of responsibility that we have is to protect the revenue. So we need to make sure that when we grant licenses and grant permissions, that we are keeping the revenue and protection of that revenue in mind. And then the other one, we have a bulk spirit permissions, and I think Bennett might talk about those a little bit later, I think. So yeah, they're the types of things that we do. Our wonderful client services area here in Adelaide are responsible for processing those applications when they're made. So I talked briefly just a minute ago about one of our permissions being a periodic settlement permission, and as I said, that's us allowing you to deliver goods into the market on a daily basis if need be, but you only report and pay the liability on a periodic basis, and that could be weekly, monthly, or quarterly, depending on approval. So it means that people don't have to come to us each time they want to deliver goods and to get authority from us, which is the top dot point there, prepayment. So prepayment is where reporting and payment of the duty happens before the goods are delivered into the domestic market. So you come to us, you tell us what it is, you lodge your return, you pay your duty, we provide a delivery authority, and you can then release the goods from the licensed area. So they're the two different things, and you can probably see that prepayment is a revenue protection, I guess, mechanism, because we receive the duty before we allow goods to move out. Periodic settlement permissions, there's goods going out of licensed premises before the sort of duty is paid. So there is a risk there, and that's what we have to monitor. And obviously, not to highlight something that's probably a bane of your existence, rates are indexed in February and August in line with the CPI. Movement permissions. So that is a permission to move under bond goods, goods that haven't yet had duty paid on them, generally, between excise licensed premises or to a place of export. As I said before, can be one-off. So you can come to us and go, I haven't dealt with someone before, but I just need to move these goods to their particular warehouse, their storage facility, or whatever. If it's not going to be an ongoing basis that you maybe are moving goods to them, you might just want to come to us for a one-off permission. But if it's going to be a regular sort of movement between your premises and someone else's premises, you've got a new contract with a supplier or something like that, you may want to get a continuing permission so that every time you want goods to move from your premises, you don't have to come to us and get that approval. There are conditions on movement permissions, and it does contain conditions about documentation that needs to be created. So it's to comply with record keeping requirements, and those documents are generally sent with the goods when they're moved, so that both the entity moving the goods and the entity receiving them is aware of what goods are in there. So just to make sure that what's left one facility turns up at another. I believe there are record keeping, more detail on the website about record keeping. If anyone wants it and is having trouble finding it, let us know and we can send a link. And I think that's me. I think it's over to Bennett. So he's going to talk about bulk spirit permissions.
Thank you, Sally. Look, for those that were at the ADA conference, this is where we started getting a lot of questions, interestingly, in relation to this particular topic. Look, it is something that's rather peculiar that exists in the excise space, but something that is of particular relevance to you guys, because it's all about spirits and other excisable beverages. And this, I guess, is the sort of thing that, you know, for the new people in the audience, it wouldn't be intuitive at all. It is a peculiar reason. My understanding is it's designed to serve a particular purpose. So we'll talk about what it is. As I said, if there are questions about this, raise them in the Q&A, but based on past experience, this did seem to be a controversial topic, and it did actually surprise Sally and I. So for whatever reason, bearing in mind that the ATO doesn't make the law, we just administer it, you need to get written permission from us if you want to enter spirits or other excisable beverages into the domestic market in a container with a capacity of more than 2 litres. So basically what that is saying is your bottles of spirit can go out. You know, you can pay the duty on them, or you can apply the remission scheme for manufacturers of alcoholic beverages to them. That's all fine. But the vibe really is that we don't want spirit going out in large containers into the domestic market. Sally talked previously about goods being delivered and goods being entered and so on and so forth. Something that you need to bear in mind. And if you look at the volume restriction of the container, it's not very big. You know, more than 2 litres. So that's something to be aware of. If you're talking about a 2.5 litre bottle of spirits, under the law, you need to get permission from us. And as Sally was talking about before in relation to things like periodic settlement permissions, licenses and movement permissions, we assess them and we provide permission on a case-by-case basis. Another important point to know, and this was once again very topical at the ADA conference, the law is worded in a manner where we cannot give you that permission if we think that those goods will be repackaged into another container for the purposes of retail sale. That's actually a hard prohibition. So I think the takeaway from this session, for those of you who weren't aware, if you're looking at allowing spirit to leave your licensed premises and to leave our control, the ATO's control, in a container with a capacity of more than 2 litres, you need to be getting in touch with us. Not Sally and I specifically, because we work in the technical advice team, but we have a client services team. You need to get in touch with them and they will consider your request and respond accordingly. Next slide, Sally. Bear with me. Okay, so look, probably a pretty controversial topic for the distillers here, and look, we do appreciate that. All we can say is we administer the law as written. We don't make the law. But look, no secret that the rate of duty that applies to spirits and other excisable beverages is very high at the moment and continues to go up with indexation twice a year. Now, all of the particular tariff items are found in the schedule to the Excise Tariff Act. Sally ran through the broad classifications at the beginning of the presentation. Item 1 in the schedule relates to beer. That's probably not going to be relevant here. Item 2 will probably be relevant, and that's other excisable beverages not exceeding 10% alcohol by volume. And as Sally mentioned previously, that's a little bit of a catch-all. You know, think of your RTDs, think of potentially fermented beverages that don't meet any of the wine equalisation tax definitions, potentially fermented beverages that don't meet the definition of beer. And then probably the main one for the people here today would be item 3, which is spirits and other excisable beverages exceeding 10% alcohol by volume. Important to note, unlike a lot of taxes are based on price. GST, wine equalisation tax, excise duty on alcohol is calculated on the litres of alcohol in the product. So it's actually got nothing to do with the price that you're selling the goods for. It's all about the litres of alcohol in the product. And to work that out, at least for people in the other excisable beverages and spirits space, it's relatively straightforward. You work out the allows by multiplying the volume of product by the alcoholic strength of the product. The rules are a little bit more complicated when it comes to working out the allows for beer, but we won't worry about that too much today unless anyone's got any questions on that. Next slide, please. Okay, so I talked about this previously. Pretty obvious stuff. A can of, whiskey and dry ginger ale. That's what I like to drink. Gin and tonic, things of that nature. I'm sure people have heard of alcoholic seltzers. It's a contentious topic at the moment. We have some documents out there in the public domain regarding the taxation treatment of seltzers. Depends how they're made, but potentially they could fall to that tariff item. As I said, total alcohol content. So that's relatively straightforward. And in the upcoming slides, we've got some worked examples. So here's a worked example. This may be old news to some of you, but for the benefit of the new people, we wanted to give a practical example. So I'll basically just talk through it, but it is pretty self-explanatory. So we've got 20 cases of premixed gin and tonic, each containing 24 375ml cans into home consumption on the 9th of April 2024. The product has an alcoholic strength of 4.2%. So clearly you can see that that fits to the other excisable beverages not exceeding 10% by volume of alcohol category. So you take the number of cases, multiply by the number of cans, by the volume in each can, you get a total quantity in litres of 180 litres, and basically all you do is you take that quantity in litres, you multiply it by the alcoholic strength of 4.2%, and you get 7.56 Laos. Now, when it comes to actually calculating duty and reporting goods on your excise return, there are actually rules in relation to truncating decimal places. We're happy to field questions on that. For the purposes of this example, we kept it simple because there is something in the public domain that says that when you're working out the total quantity of Laos for a period, you can truncate to one decimal place. So you'll notice that we've taken 7.56 Laos and we've turned it into 7.5. You multiply that by the current rate of duty, which as a result of the most recent round of indexation is $103.89, and you get $779.17. I'm hoping that makes sense to everyone, but if not, we're happy to field questions. Okay, on to item 3, which I guess is for the more high strength stuff. You've got sub-item 3.1, brandy. That, for whatever reason, once again, policy issue, not something we can comment on, is subject to a slightly lower rate of duty, $97.02 per litre of alcohol following the last round of indexation earlier this month. Other excisable beverages exceeding 10%, really sort of a catch-all there for most stuff, brandy, whiskey, vodka, rum, gin, scratch brandy, everything that I just said except for brandy and more in addition to that, $103.89. That's the highest rate of duty in the alcohol space, and it's the same as the rate that applied to the other excisable beverages not exceeding 10% by volume of alcohol. As Sally mentioned previously, in certain situations, spirit can actually be subject to a free rate of duty. But obviously, given that there's a big difference between free and $103.89 per litre of alcohol, there are pretty tight controls around that stuff. As a general rule, you will need to come to us and get what is called a concessional spirits permit from us. So if you're wanting to use spirit to fortify wine or must, and where they talk about wine there, you're talking about wine that's subject to wet, you need to get what's called a concessional spirits permit from us. And once again, we assess the applications. If you fall within a class of persons, in certain situations, you can get that spirit at a free rate of duty without a permit. But I think your suppliers will want to establish your bona fides as falling within that class of persons. And I think there will be some changes in that space within the next few months. Can't say too much about that now, but looks like some things will change in that regard. Those people will still be able to get their spirit, but there may be some tightening of the rules around that. If you don't fall within the class of persons, but you want to use spirit for one of these purposes, industrial, manufacturing, scientific, medical, veterinary, or educational purpose, you need to come to us and you need to get a permit. There are rules around when we can say yes and when we can say no. An obvious example is we wouldn't give you a concessional spirits permit to use spirit in the manufacture of an alcoholic beverage unless it's only going to be an incidental input in the product, you know. And an example of that would be perhaps a concentrated flavour that uses alcohol as a carrying medium. Sally talked about denatured spirits before. That's basically spirit which has had something added to it, and there is actually a list of allowable additives with a view to making it not fit for human consumption. So methylated spirits is an example of that. I think you can tell from the price of methylated spirits that there's no way there's excise duty included on that, because if there was, it would be a lot more expensive. And then the catch-all, which, as Sally mentioned previously, includes spirits that aren't beverages. That spirits are not elsewhere included, and that's the top rate again, $103.89. Next slide, please. Okay, this was another contentious topic at the ADA conference, and in some ways it was actually linked to the bulk spirit permission rules. For those of you that don't know, most of the spirits that are subject to excise duty do not actually have particular definitions. So from a tax perspective, there's no definition of vodka, there's no definition of gin, and there doesn't need to be because the rate of duty is exactly the same. But for whatever reason, the exceptions really are brandy, whiskey, and rum. And they are what we describe in the technical advice space as essential characteristics definitions. And what that basically means is brandy is what people think brandy is. You know what I mean? It needs to be made from a certain thing. It needs to possess certain characteristics. Same for whiskey. It needs to be made from a certain thing, certain characteristics. And rum, obviously, made from sugar cane. Another thing to bear in mind with this, and I think this is where potentially the connection to the bulk spirit permission issue came from, is that these things cannot be delivered from the ATO's control unless they've been matured in wood for a minimum of 2 years. That only is the case for brandy, whiskey, and rum. And as I've said, it's an essential characteristics definition. So we're looking at things like feedstock used to make the product, and the taste, aroma, and other characteristics attributed to the product. You know, is it what people would regard brandy as? And I think I've covered the maturation requirement. Thanks, Sally. Next slide. One moment, please. Okay, another example, not that different to the tariff item 2 example, but for the benefit of the people that are relatively new. 5 cases of brandy, 12 750ml bottles in each case, delivered on the 9th of April 2024. The product has an alcoholic strength of 37%. To work out the Laos, 5 cases, 12 bottles by 750ml. In each bottle, you get 45 litres. You multiply that by 37% and you get 16.65 Laos. Talked about the truncating before. I think we got a question in the Q&A box. I saw that pop up before, but we'll come back to that because I think we're nearly done with the slides. Truncate that to 1 decimal place. You get 16.6 by 9702, bearing in mind that this is brandy and so a slightly lower rate of duty applies. And look, it's a fair bit. $1,610.53. Look, we understand, I guess, the views out there regarding the impact of, you know, the duty rates and, you know, the ongoing impact of indexation. But look, fortunately for us, we administer the law. We don't actually make it. So next slide. So this is another thing that was, I guess, relatively controversial and relatively topical. And look, I think it is pretty logical as to why that is. You know, we're talking about the excise remission scheme for the manufacturers of alcoholic beverages. Effectively, what a remission of excise duty does is it waives a liability. So instead of actually having to pay at the rate of $103.89 on your product, you don't have to pay that at all. It's only up to a maximum of $350,000 per financial year. There are requirements that must be satisfied, and I think the requirements are designed to make sure that there's some form of investment and contribution to the industry. At least that's my understanding of it. Whether that actually works, we can't really comment on that. I guess we would be interested to hear your thoughts. We heard mixed reviews of the remission scheme when we were at the ADA conference. But once again, we can't change the law. We have to administer it. Broadly, the criteria are you have to have a manufacturer license. You have to have an excise manufacturer license. It's not enough to have an excise storage license. Sally and I have had to deal with that very issue in the work that we do on a daily basis. You must hold an excise manufacturer license to be eligible. You need to have manufactured an alcoholic beverage and entered it for home consumption. Where it's talking about manufactured there, it's really saying that 99.9% of the time, you need to be the one that's manufactured the products with your own hands. There are very high hurdles to jump over to qualify for the remission scheme where goods are manufactured on a contract manufacturing basis. Entered for home consumption, we talked about what that means. Basically entering the domestic market and leaving the ATO's control. The other requirement is you need to have fermented or distilled 70% of the alcohol content of the beverage. If it's fermented, you need to ferment 70%, as in a fermented beverage that you're entering for home consumption. If it's distilled, you need to have distilled at least 70%. The one that we see a lot of issues with and we get asked a lot of questions about, you have to be legally and economically independent of any other manufacturer who has applied a remission in the financial year, or in certain cases claimed a refund in relation to this particular scheme. And it's pretty obvious what that's designed to do. As soon as you, I guess, implement an incentive and you put a maximum amount per financial year on it, the opportunists will look at ways to potentially split their business up. And instead of having one business undertaking all of these particular tasks, they could split it up into 10 businesses with a view to potentially availing themselves of 10 lots of the $350,000 cap. So I guess we have this integrity measure built into the excise regulations that's designed to prevent that from happening. And basically what it says is, if you do not have the capacity to make business decisions independently, you're not legally and economically independent. Therefore, only one of you is able to apply the remission in a financial year, and basically that works on a first in best dressed basis. Also need to satisfy the still ownership testers if required. I'm going from memory here, but I think there's an exemption in relation to the first and second financial years that an entity was eligible under the scheme, and then beyond that they need to have sole ownership of a still, and there's various other criteria that goes along with that too. But if there are any questions on that, we're happy to field those too. I think that's the last slide. I can see there's been a fair few questions coming through, so happy to proceed with the questions. If
I've been sort of looking at them again. I'm not even going to comment on things that are in there that are not questions. We're here to help. We're not here to sort of comment on policy, comment on the duty rate, anything like that. So we'll just go through and try and help the people that are asking questions. Early on, there was one about how often are periodic permissions or PSPs reevaluated. Yeah, if you want to go from monthly to, oh, hang on, my camera's not on. Not that it makes difference. If you want to go from monthly to quarterly, you would have to apply. Quarterly is only available in certain circumstances, and I can't remember off the top of my head what the rules are. Bennett might remember. Being a small business entity, is that the one?
Small or eligible?
Small or eligible business, $50 million turnover. But yes, in terms of reevaluating them, they don't really get reevaluated unless you apply to us for a different settlement period. There seems to have been a bit of confusion about bulk spirit permissions. Oh, hang on. There's one here about a movement permission to move spirit from a distillery to an off-site storage. Yes, you would. The off-site storage facility would need a storage license, and you would need a movement permission because if it's not part of your manufacturing facility that has a manufacturer license, then it would need a movement permission to move it. Domestic market, bars, restaurants, nightclubs for use in-house. And there was a question a bit further on about bulk spirits. So you can get bulk spirit permissions from us. And one of the ways, or one of the sort of times that might occur is where they are sold in a larger container to bars, restaurant, nightclubs and things like that for use in-house for mixing cocktails over the bar and things like that. So that is a time when we may approve a bulk spirit permission. If we contracted to produce alcohol, we can't supply that in an IBC or similar container for the purchase of a bottle. If it's going to someone who has a storage facility, my understanding is, Bennett, jump in, they can bottle it there, and then it's not, you need a movement permission to move it to them and can bottle by them. If they don't have a storage facility, if they don't have a license from us, either a manufacturer or storage, that's when the problem occurs, because you are in effect having to enter it for home consumption in a bulk container for rebottling or repackaging, which is, as Bennett said before, something that we aren't allowed to do. Rounding down. Yeah, you can do the rounding down one.
Okay. Now, I'm just trying to find the question in the chat. Okay. Look, Sally and I have been around for a while. We remember most of the stuff off the top of our head. Maybe just a call out, and I don't know, I'm happy to, if people can react in the meeting, we could go with that. I'm assuming people are aware of the publication that we have called the Excise Guidelines for the Alcohol Industry. If I could get a thumbs up or something from participants. Yeah, anyone else? Yeah, okay. So that's covered in the guidelines. And look, I guess to answer your question very briefly, it's more from memory, and I can look it up because that's the benefit of doing this from my desk. It's more based on tariff items and sub-items. So I think, off the top of my head, and I'm happy to look it up for you if you want, that you truncate at a tariff item or sub-item level when you're completing your excise return. And then when you're calculating your excise duty, you truncate to 2 decimal places. That is covered in Chapter 6 of the Excise Guidelines for the Alcohol Industry. It's got a couple of examples. So I'll read out what it says, because obviously, as I said, this is a document that's in the public domain. It's a good resource for those of you who aren't aware, and we actually have a link to it on the slide that's on the screen at the moment. So when they come around after the fact, people that weren't aware of it will have access to that. Okay, so I'll read to you from a worked example. It says the dutiable total for goods delivered under sub-item 1.1 is blah, blah, blah allows, and for goods delivered under sub-item 3.1, so you've got 2 different tariff sub-items there. You've got a brandy one and you've got a beer one. However, when completing your excise return, the dutiable quantity allows for goods classified to a particular tariff item or sub-item, so that's what I said before, may be truncated to 1 decimal place. So what you can do is you can group all your item 2 stuff together and truncate it to 1 decimal place when you've added them all up. Or you can group all of your item 3 stuff together and truncate it. And for those that aren't aware, truncating basically just means anything after the first, or truncating to 1 decimal point means anything after the first decimal point is disregarded. It's not rounding, you just chop it off. Now, in terms of actually calculating the duty, it's somewhere else, which is a little bit annoying, but I know it's here because I've seen it. Give me 2 secs. I reckon I've nearly got it. Actually, you go ahead, Sally. I'm finding it harder to find than I thought.
Okay, I'll just go through a couple of the others. I think Tom's got a question in here, and I don't know whether my previous question answered it. If rebottling bulk spirits is not allowed, rebottling's fine, but you can't enter the goods for home consumption. So you can't duty pay spirits in a bulk container for them to be repackaged. So if you want to sell spirits to someone and they're going to repackage it, it needs to be moved under bond. You can't enter for home consumption, the 2.5 litre container or whatever. You would have to move it to them on a movement permission. They would have to have a storage facility, and then they could rebottle it into tasting bottles. That's how you would do that legally.
Back again, I found it. So you truncate total duty to 2 decimal places. So I'm hoping that answers your question. I mean, I know your question was pitched in terms of sales transactions. It's not really worked out on the basis of sales transactions because, as I said, when you're working out excise on alcohol, you're talking about the litres of alcohol in the product. Look, once again, no surprise, lots of questions about bulk spirit permissions. To add to what Sally just said, talking about goods being entered generally means the duty's been paid. I think an important point to note with that as well is that could cover a situation where duty doesn't have to be paid because the client's applying the AMR. So basically, if the goods are being entered, even if that entry doesn't result in the payment of duty because the remission scheme is being applied, you could still potentially fall foul of that prohibition unless you've got permission from us.
There was a question there about why the increase seems to be above what the CPI is. It's based on the CPI. There's a CPI indexation figure, which is what we use or what is used to calculate that. So it's not just the CPI. There's actually an indexation figure, and I'm happy to link to the calculation. There is an example or explanation of that on the website. Brandy, whiskey and rum must be 2 years matured in wood as a minimum before it goes out to the end user. Yeah, before it's entered for home consumption. So before it goes out and before the duty's paid on it, it needs to be matured in wood for at least 2 years. Thank you for the person that has linked to the guidelines. I think I was just looking for it to link in the chat. So I think that's been done. If it's not, let me know, get in contact with me and we can send you a copy of the guidelines. It is a good publication and covers a lot of the stuff, or answers a lot of questions or provides a lot more information about the various different topics. It's a long document, but it's not designed to sort of read from cover to cover. It's just designed to go to each section as you might need answers to certain things.
Okay, so the question regarding disposal of old R&D product that we don't want to sell. So are we talking about stuff that's still under bond? So still stored at the licensed premises? Because the answer to the question sort of depends on whether it's gone out into the domestic market or whether it's still at the licensed premises. I mean, what you would actually need to do if you're wanting to dispose of excisable goods and thereby not pay the duty on it is contact us and apply for a remission of that duty. We talked about the remission scheme. That's a particular thing. There are various different other remission circumstances under the excise law and the excise regulation. So what I would suggest is that you get in contact with us. Depending on the circumstances, there's probably an application form that you need to fill in to apply for a remission. And I'm pretty sure as a general rule, and we don't actually deal with these particular applications, but our colleagues do, you do actually need approval from us before you destroy the goods, as a general rule. If you're looking at moving goods to a destruction facility, You want to engage the ATO early in that regard and let them know what it is you're proposing to do and get approval from the ATO to do that. As Sally mentioned during the presentation, very highly regulated system. You know, if we were talking about wine that was subject to wine equalisation tax, you wouldn't need to do that. You don't need to do that. So I'm hoping that answers that question.
There's a question there about who the people are that fall within the free rate of duty.
I can.
You can do that.
Up to you. Look, I guess it's rather niche, and it recognises the fact that alcohol is apparently pretty useful for various different things. I mean, it's good for cleaning things, it's good for sterilising things. Our understanding is that it's very good as a carrying medium in flavours. And so I guess the people, to answer your question broadly, the people that are allowed to get that stuff at a free rate of duty are really not using it to make excisable beverages, if that makes sense. You know what I mean? So you could be talking about a situation where they're making vanilla essence. Now, as a general rule, vanilla essence wouldn't be regarded as an alcoholic beverage. Maybe you could drink it if you were game. It'd probably make you feel pretty sick. Same thing with methylated spirits. You know, people use alcohol making cakes. You know, people use alcohol to sterilize lab equipment. All sorts of reasons. I guess don't feel like there is a pocket of people out there making excisable beverages and then they're not paying any excise duty, at least not from a concessional spirits point of view. Sorry, Sally, did you want to say something?
No, I wasn't going to say anything.
Yeah.
What were you going to say? That I make vanilla essence at home?
No, I think you were. I thought you were potentially going to talk about the illicit alcohol issues, because obviously that is a problem, and that's something that we're aware of. But in terms of these people that get a free rate of duty, you know, the rules are set up in a manner where that doesn't really apply to people that are using that stuff as a significant component in an excisable beverage. So I'm hoping that answers that question.
There's a question about first step for startup RTD and spirit branded company to be assessed for the excise remission scheme, where they're currently using a contractor to produce. That might be something that we can probably is covered to a certain extent in the excise guidelines for the alcohol industry, which Bennett talked about before. And also, I think if it's still on the screen, there's an excise ruling on the meaning of legally and economically independent. There's a couple of instances, or a couple of the sort of criteria that become an issue where someone uses a contractor to make the goods. I think the real crux of the scheme was supposed to benefit those who have, I guess, skin in the game in terms of owning a still, all of that kind of thing. But the law is the law, and we interpret it as best we can. So the excise guidelines have information about use of a contract manufacturer, and the meaning of legally and economically independent ruling talks about it, because it's the issue of whether you are actually manufacturing something. So if you're using a contract manufacturer, then you're not the manufacturer. And also meaning of legally and economically independent, because you have to be legally and economically independent of any other entity that has applied the remission during the previous financial year. So it gets a bit grey when you're using a contract processor about whether you are more so economically independent. Those two publications can sort of have information then in them to read. We don't really assess you as to whether you are eligible. You have to have a manufacturer license as a starting point. That's where an assessment takes place around whether you can have a license. But your eligibility for the remission scheme is not something that we assess or we look at as part of the licensing process, because eligibility of the scheme is not relevant as to whether we would give someone a license or not. It really is for people to go away and have a look, get independent advice, sort of do their homework. We do field a lot of questions on it where we can around whether someone will meet the criteria. So eligibility really is you go through what the criteria is, and if you meet each of those, then you would be eligible to apply it. But like I said, for someone using a contract processor, it is a lot more difficult. meet that. And like I said, have a read of those documents. If you do have any questions, our contact details are there too. Happy to get, field any calls or emails with more specific questions. 5,000 people on Home Distillers on Facebook. We have a risk and intelligence area that do monitor these types of things. There are strategies that are underway where we're sort of resourced to do that. We do as much as we can. Bennett and I don't work in the area that do that. We work in a tech advice area, but we do know that illicit alcohol is a focus area for our risk and intel area. They do monitor some of those things as much as they can. Unfortunately, being a government department also means we're constrained by resources. But like I said, it is a focus for our risk and intelligence area. We have an illicit alcohol group that look at those sorts of things.
Yeah, the question regarding sending bulk spirit to a processor for canning to make RTDs, yeah, movement permission. We're doing our best to work our way through all of the questions just for the benefit of everyone. We're not deliberately trying to avoid answering anything. There just seems there's a fair few there. So apologies if we've missed anything. Yeah, that would be an underbond situation and a movement permission situation. You wouldn't want the goods to be being entered for home consumption in the bulk container. That's what the prohibition is really all about. So there's a way to do it. The barrels, yeah, the barrels one. Look, I think that's a tricky question. And I think if you're asking for our position in a forum like this, some of you are probably aware that maturation is regarded as manufacture for excise purposes. So if you're selling something in a small barrel, I mean, first of all, I guess it depends on the size of the barrel. The first thing you've got to worry about, and this reminds me of what was asked at the ADA conference, is the barrel a bulk container? If so, you'd need to get permission from us. And bearing in mind, bulk container is, I think, from memory, more than 2 litres. But the other thing you've got to bear in mind with that is that while it sits in that barrel, maturation is occurring, and that's potentially excise manufacture. It's probably excise manufacture. I think we have something out there in the public domain that says that's the case. So the poor person in possession of the barrel for a present is arguably manufacturing excisable goods without a license. So look, I think if people want to come to us with that specific situation after the fact, we're happy to provide a more considered response. But I do see some issues there because I think the ATO's position is pretty clear cut that maturation is manufacture. Anything else?
I know there was a thing in there about us checking the Q&A section. I can't access it. It's
neither
telling
can I.
me. Yeah, so happy if you can put
Whack
anything in the chat that was there. Question about samples or competitions. No, you can apply to us for an exemption on samples, but I think, and again, it's in the guidelines, it talks about less than a saleable quantity. So it would be sort of a tiny amount, really, that would be, potentially sent off for testing or something like that. But bottles that are sent off for competitions and things are not exempt from excise.
I'll do the next one. I see there's a bit of chatter about Negronis. I see Mike has provided a response to that. I think Mike's right. It's not about whether the stuff's duty paid or not. You can use duty paid stuff, and if it's regarded as excise manufacturer, that theoretically means that there's another lot of excise duty that needs to be paid. So I think it would really come down to how these Negronis are being made, but also whether they are being sold in a glass over the bar or sold in a container for takeaway consumption.
But we are always happy for if you believe that there are people doing things they shouldn't be.
Intelligence, yeah.
Intelligence, there's only so much that we can do not being on the same side of it. So we are always happy to receive intelligence sent to us.
Sally and Bennett, I think we're getting quite close to the end, and you were saying that you can't reach the Q&A, so I'll just throw a few on there. But I think you've covered most of it, to be honest. Are there bulk spirit containers sold in Dan Murphy's direct to consumers? Does the manufacturer just need ATO permission for Dan Murphy's to allow this?
What when we're talking about the stuff that's being sold in Dan Murphy's, what are we talking about?
Consumers. So I'm assuming like RTSs that are over 2 litres.
Okay. Yeah. Look, it's that could be something that the ATO is not necessarily aware of. I mean, I guess, you know, there was the comment before about the home distillers, unlicensed distillers. You know, I mean, that would basically mean that the stuff's being entered for home consumption in a bulk container. So I think that, you know, as Sally was saying before, unfortunately, we don't have eyes and ears everywhere, and we do rely on intelligence from industry as well. I can see there's a comment from Christian, tip-off line, email address. There's information on the website about that. And I think basically what you need to do is go to the ATO website, ato.gov.au, and if you search for Dobbin, it will tell you how you can do that, and you can do it anonymously. Mike, you've got a comment about in a bottle versus sipping it in a cup. What's the difference? So are you suggesting that every pub in the country is undertaking excise manufacturer when I go there and ask for a Jack Daniels and Coke? Because I guess there is a difference, and that's the ATO's position on it. You know, being consumed in a bar by the glass, you know, that is part and parcel of what the products were probably designed to be used for. So I think there would be a massive uproar if, you know, all licensed premises were undertaking excise manufacture.
Okay, fantastic. And
no, it was just, oh, sorry, no, Mike, it was just a comment about in a bottle versus by the glass. What's the difference? Maybe I misunderstood what you were saying. It seems like the list of questions is growing. In a bottle versus sipping it in a cup, what is the difference? That's what I was referring to.
Yeah, I think we'll just keep moving on. We've only got a short bit of time. Mick, level playing field regarding wine, beer and spirit. The ATO has no control on that. That's a policy issue.
Can I just say one thing? Yes, Mike, I agree. I've just seen what you've posted. Different issue.
But yeah, the issue of levelling the playing field, wine, beer, spirit policy issue, unfortunately, we sit here on a day-to-day basis and try and help people comply with the law that is in effect at the time, the law that is written and the law that we have no say in what it is. So we do the best we can, but that's a policy question.
Okay, fantastic. Guys, I think we've got a lot out of that in the hour that we've had. A huge thank you to Sally and Bennett. Really incredible stuff, guys. Thank you so much for your work. We really appreciate it. There are a lot of challenges. What we want to be doing is being a really responsible industry. The distilling industry, as we know, is quite young in Australia, so we're really looking to hopefully really put a good sign on that. So thank you, Sally. Thank you, Bennett. We really appreciate it. Any final words, guys?
Look, I think Distiller A, our good friend, has had his hand up patiently for quite some time, but I think he has to ask a question in the chat. Is that correct? We've got a few people putting their hands up, but I'm not sure if that means they can't access the chat function or something. But no, look, thanks for having us. We hope we helped. Sally, anything you'd like to say?
No, please do call us. Like I said at the beginning, I hope people who have reached out to us, who we met at the distillers, the ADA conference, can attest to the fact that we do try our best to get back to people as soon as we can. That's what our job is. We're here to help. And as Seb said, you know, our job really is to try and make sure that people are doing the right thing. Maybe then, you know, we can divert our attention to those who aren't. But, you know, we do what we can. Pass on information to us if you feel like, I mean, Mike's point about aging Negronis in a barrel behind the bar. You know, if you've got issues, if you feel like people are doing the wrong thing, please let us know. But otherwise, if you've got questions that couldn't be answered today or we didn't get to, please just reach out to us. We're always happy to help.
Agreed.
Thank you so much. Thank you so much, guys.
Thank you for having us as well.
Yes.
My pleasure. Thank you so much, guys. And yeah, we really appreciate it. Yeah, thank you, Spirits Victoria Association, for organising it as well. We're very, very excited about these webinars, and we'll getting them up and going as soon as we can. So if anyone's got any ideas of another webinar, please feel free to let us know. This will be, we have to do a review on it, but then it will, the idea is that the recording will be put up on the SVA page as well. So very exciting. Thank you for your time, guys, and keep making delicious products, and please obey the law. Thank you. Cheers, guys. Appreciate it.
Thanks. Bye.